If you've ever been paid by a prop firm, or you're thinking or trying to pass a trading challenge right now, or thinking about getting into one, or you believe that because it's a demo account or the firm's offshore or it's not regulated, that somehow tax doesn't apply, you need to watch this video, because some of the most common beliefs that funded traders rely on are completely wrong. And a few of the things that I'm going to go through in this video could land you in serious trouble with HMRC. In the last year alone, I've seen thousands of traders repeat the same assumptions. It's a demo account, or there's no tax, or the prop firm's offshore, HMRC can't see it, it's trading, so it must be capital gains or spread betting. It's basically gambling, or if it's under $1,000, I don't have to declare anything. Every single one of those statements sounds logical, and every single one of them is dangerously misleading. So today I'm joined by Josh Thomas, a very, very respected and reputable UK accountant who deals with traders every single day and these trading prop firms as clients. And what he uncovered when we broke this down properly is going to shock you. Many of these prop firms out there are not making their money from trading performance at all. They're making the majority of their money from entry fees, from failed challenges, from traders being recycled through a system that looks like funding, but it behaves very, very differently when you follow the money. And once you understand how these firms really operate, it changes everything about how HMRC views your payouts. So in this video, we're not guessing, we're not using internet myths or anything like that. We're not relying on what prop firm marketing page says or anything like that. We're breaking this down using UK tax law, HMRC guidance, and real world accounting reality. By the end of this video, you'll know confidently how prop firm income is actually classified in the UK, which expenses you can legitimately deduct, whether you're taxed at all, what HMRC looks for if they even review your activity, and the safest, smartest way to receive prop firm payouts without sleeping with one eye open. So if you're funded, or you're trying to get funded, or you're thinking about a funding challenge, or you plan to make serious money through prop firms in the UK, this might be the most important video you watch this year. So let's get stuck into it. Josh, thanks for coming in. This is one of the most highly demanded questions that I get on this channel is, can you do a video about tax around prop firms? And before we get stuck into it, because I know we're going to cover off quite a lot, just give us a brief introduction to who you are.
So I have owned a tax advisory firm and accountancy firm for just over 5 years now, and previously worked in numerous different firms doing the same. We have a team of close to 40, and we deal with traders, limited companies, right up to high net worths and large corporates, advising on how people can make the most out of the money they earn and pay the least amount to HMRC. So very used to advising on tax tips and ways to make more out of the money that you earn. So thank you for having me on.
No, amazing. Accountants get a hard rap because there's a difference between tax advisor, tax planner, tax accountant, right? Just to clarify, what's your sole kind of, what do you focus on?
My focus personally is tax advisory.
Right.
I see a clear differentiation between accountant and tax advisor. For me, everyone's definition is slightly different. An accountant focuses on the compliance element. So it's the payroll, it's the VAT returns, it's the accounts, it's the self-assessment tax returns, it's the completion of, as well as bookkeeping and payroll, etc. A tax advisor is looking at an individual or a company's situation and going, how can we actively strategize and structure for them to be more tax efficient and pay less in liability to HMRC, therefore keeping more of the money they earn. Mm-hmm. So a tax advisor is solely responsible for doing that in my own definition. Yeah. So in my firm, we have an accountancy department and we have a tax advisory department. We don't have accountants that do all of the tax advisory. They have knowledge in tax advisory, but we have separate tax advisors that focus just day in, day out on advising individuals how to be more tax efficient.
Great.
And that's because of my definition. I've set up the business to be according to my definition.
Perfect. So anyone listening, if you speak to Josh, he'll be able to advise you either way. But we did a previous video, and if you haven't watched the previous video was all about tax on trading. So if you are a trader and you are funding your account and you're making a load of money, depending on whether it's a spread betting account or a CFD account, or you're set up as a limited company or a sole trader or whatever, everything you need to know about that structure was in that video, and I highly recommend you go and watch that. What this video is about in itself is prop firm trading. Now, do you have any experience in prop firm trading?
Yes, we have clients that have done it previously, both as an individual, so a sole trader, and also as a limited company.
Amazing.
We've also dealt with the prop firm.
Great.
So we can see the full lens for it.
There you go. So no better person to be here. The question, the biggest question, the elephant in the room, which you're going to we're going to conclude throughout this whole video, but it's people are signing up for these prop firm challenges, and they think that they're traders, but you'll know what I mean when I say that in a moment. But they are getting payouts from the prop firm if they're good enough, and then they are assuming that the income from that prop firm is treated the same way as, say, a spread betting account on their trading account. So even if they watched the last video that we did where it says spread betting's tax-free, they might have gone, right, great, signed up to a prop firm. Now they're getting payouts from a prop firm, but because the payouts are coming from a prop firm, that's now a company which is paying you as a service provider or a sole trader or as an employee, depending on how the contract's written. So do you have to pay tax on payouts from a prop firm?
So the income being tax-free is a myth as such, because you're essentially providing a service. And rather than just looking at every sort of individual situation, I try and understand the reasoning behind if it's taxable or not. So I'll explain that first, and then I'll go into the specific situation. So when capital gains is payable, which is a buy and sell, it's buying an investment, holding it for a long period of time, selling it, that is an investment, so therefore capital gains is going to be payable. So capital gains is the tax on investment income. Whereas if you're providing a service offering, whether that's as a sole trader or as a limited company, you're providing a service to an individual. That is an active trade. And with a prop firm, you're using someone else's capital to trade on the markets, to then hopefully make money, to hopefully get your payout. You're providing a service to that individual. Just as a real estate broker is trading with a brand's reputational goodwill and equity that they've brought up or they've built throughout the process of building their brokerage to then go and sell properties under their brand, they then get a payout of the percentage of the property they sell. Similar, incomparable situation, but you're essentially trading someone else's capital, so you're providing a service.
Right.
And when you're providing a service, it's subject to either income tax, if it's at the personal level, which is a sole trader, or corporate tax, if it's inside a corporation, which is a limited company.
Right. So the benefits of... So we're in this position where traders see these prop firms as a great opportunity to access cash quickly so that they can grow their account faster, because as a trader who wants to learn trading, they're usually limited for funds, right? Or at least enough funds to make it worth their while trading to generate enough returns to live on, say. So the kind of irony is, if they were to just trade their own money and put it as spread betting, they wouldn't pay any tax. They're now enrolling in a prop firm challenge. The prop firm is now saying, okay, you pay us this amount of money, which is the contract, like you've paid us to kind of be part of this. We're now going to pay you out if you generate a certain yield or return on our money. And we're going to pay you on a monthly basis or a quarterly basis or however they do it. But now they're subject to tax, right? Most of the people watching who are asking this question will be individuals. So I don't think they would set up a company to do this through, although they might. But I think if they set up a company to do it through, it could potentially be more of a headache. What if is it more moving parts? Is it more of a headache to do it that way, or is it stay as an individual at least and declare the tax?
So I'd make that decision based on how much you make in. Total income sources, including any other income if you're also employed and have, other income from a different source. Because a limited company, I wouldn't just see it as a headache, although there is additional compliance and additional accountancy fees and additional responsibilities. Yeah. There is all of that comes with it. But if that headache saves you an extra X% in tax, then that headache may be a worthwhile headache.
Okay.
So what I would look at is, what am I earning separate to my prop firm trading? Then what am I earning from my prop firm trading? what do I anticipate my total earnings to be? And if that amount is 50,000 plus, then you're probably best off going down the limited company route, because you're going to be into the higher rate tax band. You have 12,570 tax-free, which is everyone's personal tax-free allowance. You then have a further 37,700 that takes you up to 50,270, which is the top of what's called the basic rate tax band. If you're an individual, you pay 20% on that range of income. If you go above that, you're now paying 40%, plus national insurance, class 2 and class 4. So it starts getting really expensive.
Yeah.
Whereas if you now put it in a limited company, provided you can get a company contract with the prop firm and you do everything right, which we can get into later, you'll only pay 19 to 25%.
Yeah.
So your tax rate ends up coming down, which is where you need to sit with what I would say is a tax advisor and say, here's my total earnings. Here's what I'm anticipating to do. Should I be a sole trader or should I be a limited company, based on all the variables and context that I've given you? And they should be able to then do a calculation and say, if you do go down the limited company route, you'll save X. If you stay a sole trader, you'll be less tax efficient, or you'll be more tax efficient. Right. So make the decision based on the tax efficiency rather than just the extra paperwork or complication. Yeah. Because if it saves you an extra £2,000 a year in tax, that may be something that's worthwhile you doing. So I'd always make the decision based off the numbers, the data, and then make a decision whether it's worthwhile or not.
Yeah, great. And the reason I wanted to ask that question to you and have that come from your mouth is because, as I said at the start of that question, a lot of people are just starting out. They're just starting, right? They haven't even proved to themselves that they can make money. And I would say just, don't go balls deep. Don't run before you can walk. Just see how you do, and then based on how you do, because I always say you can pay tax later. Like, you can sort tax out once you get the money. If you get income, you can pay everything. Everything's looked after. But if you're not even making the money, what's the point in adding additional moving parts and setting up accountancy and corporate structures and all the rest of it when you haven't even proved that you can make money long term? So great. So the not advice or recommendation, I guess a recommendation I would say is just start off as a sole trader, see how you do, prove yourself for like a year. If you make 50 grand, amazing, right? Then you can start to look at going into a limited company. Would you agree?
Think it's the same with any business.
Yeah.
Because this is essentially, you've got your own business now, you're actively trading. And the less friction you have to starting, the more likely you are to start and be consistent with it. So if you take out I've got to set up a corporate structure and I've got to get an accountant and I've got to consider exactly what I need to do to pay myself via dividends and all these extra complications that come with a limited company, you may not start anyway.
No.
So definitely start, definitely get proofs of concept, definitely get consistent income, but don't let that go on too long. And have your head in the clouds if you are starting to make consistent revenue, because you could get to the end of a 12, 18, 24, 36 month period and you've paid extra X amount in thousands in taxes that you didn't need to. So get consistent, get started, don't overcomplicate straight out of the door. Once you've got consistent revenues, then just go and have a half an hour chat with an accountant and they should be able to take that headache away from you. So then you don't have the friction of it. You just pay for a service and they'll do the rest for you.
Amazing. So people watching this have got another job. They're romanced by the idea that they can make money trading, so they sign up for a prop firm challenge. Let's talk about how quickly they'll be taxed on the payouts from a prop firm, depending on their income, right? So how much ever they're earning in their job, it's just an additional earnings, right?
Yeah.
So just to clarify for people watching, if you're earning 40 grand, 50 grand in your current job, you'll be taxed immediately on anything you earn from a payout, right?
So what I'll do is I'll let people almost follow along as I'm doing the calculation so they can do it themselves.
Perfect.
So the first thing I'd be looking at is I'd start with the number 50,270. Start with that number. If you've got a piece of paper or a pad, start with that number. Then subtract what you're going to earn from your employment or your multiple employment sources if you've got multiple jobs. Maybe that's 20,000, maybe it's 30, maybe it's 50. Subtract that amount, and then you're left with an amount that you've got remaining of your basic rate band. You've already used your personal tax allowance, unless it's less than 12,570 that you're employed for. But then you're left with the remaining amount. That remaining amount is what you can use to allocate towards your prop firm profits, your payouts, minus any of your expenses. That essentially is taxed at 20%. So that's your wiggle room before you get into higher rate. The lower that number is in comparison to what you expect to earn, the more beneficial it's going to be for you to go down the limited company route. Not straight away, get consistent income first, but understand what that amount is you're left with post deducting your employment, because that is your basic rate band left. The higher that number is, the more room you've got for your prop firm payouts to be taxed at a reasonable rate of 20%. Whereas once it goes above that 50,270, when you add in your expected income from your prop firm, and I want everyone to do that now, if that's then going above the 50,000 mark, that amount above 50,270 is now 40%, plus national insurance on top. So it starts to get very expensive. And once you start to get near that threshold, you need to be considering setting up a limited company. Because at that point, you can reduce your personal income, because you don't have to take all of the money as personal income out of a limited company and pay corporate tax. One caveat I would give to that, if you're planning on just pulling all of the money out of the limited company anyway and spending it personally, then you're going to pay corporate tax in the separate entity. And we can explain how an entity works soon, should we need to. But then you're also going to pay dividend tax on top of that. So then you can pay more tax. So the caveat to that is, if you're doing this to build your own capital up, to then start trading with your own capital over a longer period of time, or you want to build it up and put it in some investments and start building some wealth for yourself, maybe you've got another business idea or venture that you want to get into later down the line, you can build it up in the corporate entity, pay a lower tax rate, be better off, and then look at potentially, you maybe want to get rid of your employment in 2 or 3 years' time, then you've got some money there to start paying yourself more tax efficiently. So that is how I'd look at it.
Amazing. What a great answer. And you mentioned expenses. So it's not all like doom and gloom. As soon as you start with a prop firm, you're paying out of your own money to enter the prop firm, right? So that challenge fee is an expense?
Yes.
Which could be deducted from your profits?
Yes. So any expense that you incur that is going to support you with your prop firm trading.
Yep.
So the official term is wholly and exclusively for the purpose of the trade. Any expense, so you may have a subscription to Bloomberg or whatever you may want to look at the markets, you may want to be studying, you may want to have some educational material. That's a tax deductible expense. You may be going speaking to that accountant or that tax advisor we talked about, tax deductible expense. You may need to go and rent an office in your local town centre because you want some focus away from your busy house, tax deductible expense. So you can start to look at income, but also minus whatever my expenses are that are allocated to the trade, and that is the amount that you'll be taxed on. So going back to that example we did, 50,270 minus employment, add on prop firm earnings, you would add on your profit expected from prop firm earnings, which is your prop firm payouts minus your expenses.
Yeah. And just to reiterate, expenses can be your prop firm challenge fees, your retake fees if you fail the first time and you pay the second time, third time, however many times you pay. Things like software subscriptions, TradingView, hardware, potentially a percentage of your broadband in your house, tax advisory. So you can literally go and pay for tax advisory with Josh, and that will kind of be deducted from your profits.
Maybe that you need to get a new Apple Mac because you need to help yourself. You may want to have an iPad next year to be looking at TradingView at the same time. All of these can be tax deductible expenses. So you may want to invest a lot of that money initially back into the progression of you as a prop firm trader, and you could then reduce your taxable profits down to pretty much nil or minimal, therefore paying less tax.
Amazing. So there are a lot of prop firms who kind of go offshore. They are out in the Bahamas or they're out in some distant faraway land and they kind of register themselves as a technology business, or they're out of the UK, say. So some traders might say, well, I'm getting payouts from a business that's located in, Hawaii or somewhere. Surely I don't have to pay tax.
Tax is due where the service is performed or where the individual is resident. So if you are, as a sole trader at the minute, that's how you trade in, you're going to be taxed based on where you're resident. So in what jurisdiction that you're a tax resident in. If you spend more than 90 or 120 days, depending on your ties in the UK, you're a tax resident in the UK. So regardless of the location of the prop firm, you are taxed where you are resident. If you were to go down the corporate entity route and set up a limited company, you're going to be taxed where the company is set up or where the service is performed. And that doesn't mean you can just go and set up a company in Dubai, even if you live in the UK, and all of a sudden pay Dubai corporate tax rates. Because where the actual service is performed, where the permanent establishment is the UK. So it's got to be taxed in the UK.
Right. And if they, if they're registered as a tech company, for instance, it's still the same, right? Whether they're monitored by the FCA or whatever, it's just a company that you're providing services to. The income's coming from wherever in the world to you, who's sat in your living room in the UK, and you pay tax. The UK are going to want their share of the tax, right?
Yeah, whether they're in the Cayman Islands, BVI, UAE, tech firm, not a tech firm, those variables do not get taken into consideration when working out what tax you pay.
Yeah.
The only variables that get taken into account are, did you have profits? If so, where are you resident? Or if so, where is your corporate entity? That is where you're going to pay your tax.
Mm-hmm. Amazing. So you do pay tax on prop firm payouts. If you are doing one of these funding challenges and you are a prop firm trader, you are going to have to pay tax on all of your profits that or all of the profit on the income that you've generated from that prop firm minus your expenses. In terms of record keeping requirements, so now they're thinking, their puppa's going a little bit, right? In terms of their expectations, what are they required? What does HMRC expect to be kept as good record keeping so that they can present and not have to worry about someone knocking on their door?
Okay, so two main things that we need to look at. One is the income, second is the expenses. So the income, we need to have a consistent flow of where the income is coming from. So easiest way to provide that is a bank statement, and that'll either be a sole trader bank account statement, maybe a personal account statement. Although I would suggest if you're going to be actively trading and you've been doing it consistently, set up a sole trader account so everything's done as it should be done. Then if it's a limited company, again, it's just going to be the limited company bank statements. Mm-hmm. That is enough to show your income. On top of that, if we want to be really diligent, have any of the statements or the payout reconciliations that are provided from the prop firms, as well as your invoices that you're sending to the prop firms, should you have that arrangement in place. So then you've got the payouts, the reconciliations, the bank statements, and the invoices. HMRC won't ask for any more than that.
Right.
Second is expenses. This is even more important because if we're going to be claiming a tax deductible expense, therefore reducing the tax that we're going to pay on our income, we need to really make sure that this is evidenced correctly. So receipt, again, the bank statement to show where the expense came out of, and making sure that the receipt actually details what it is. So you don't want to just have the payout rip-off that you get from the card machine that just shows the supplier and the amount, because you could have bought anything from that supplier. You want to have the detailed invoice that shows exactly what you purchased, and then HMRC can deem, well, that purchase is actually attributable to what this trade is. Because if you go to a supplier that sells something that's nothing to do with prop firm trading and you try and put they're not going to accept it. So make sure that you have all of your receipts. Now, for your own sake, you may want to have an accountancy software. You can connect directly to your bank, so every transaction automatically comes through, and then you can organise them accordingly. That's the process of bookkeeping. You can do this yourself. I probably wouldn't recommend going getting an accountant to do your bookkeeping if you're only going to have minor transactions. Yeah. It's an unnecessary cost. Do your bookkeeping, you can use Xero, that is our preferred software, or you can use QuickBooks, Sage, there's plenty of different ones, they all do similar.
Don't use Sage.
Yeah, Xero's the one for me.
Yeah.
Also, you can do spreadsheets. If you want to keep a track of how much you're earning and how much you're spending, go through the budgeting process yourself. You can also use spreadsheets. One thing I would make clear is there's something called Making Tax Digital coming in place for individuals and sole traders in April. I do have a video on that. Maybe you can link that in the description.
We'll put that here.
It completely explains exactly what they need to do. That is definitely something to consider because that's going to change the frequency of when you need to be doing submissions to HMRC. Mm-hmm. So that adds some complexity.
So I guess another thing you could do if you are going into this and you haven't yet, you could just set up a separate bank account just for all your payout income, just to keep it all really clean and clear so that there's no other transactions going on in that bank account other than your outgoings and expenses and your payouts, say. There are benefits to doing that. I mean, it's just cleaner. And
I would always recommend that for any business.
Yeah, right.
Separate out your transactions that relate to the business or the trade, or whatever you determine yourself as, a sole trader.
It blows my mind how many entrepreneurs start businesses in their personal bank accounts. Yeah. And I just, it's crazy.
It blows my team's mind more when they've got to sort through it all at the year end.
It's crazy. Okay. Based on your experience, this is going to be a question that I'm interested in. I know you've had experience working with prop firms. Based on what you know about those companies without naming any, what is the primary, where does their primary profit come from? Is it the traders making money on their money, or is it the challenge entry fee?
In my experience, it is the challenge entry fee, because for them, that's the lowest friction way to make money. And what is the easiest thing to market? Well, it's quick wins, quick cash, fast money, make a quick buck, go from here to here in this time, short time frame. So that is the sexy part of prop firm trading, and that's what is on their marketing materials when you see the ads on the back of a YouTube video or when you see it on social media. So be wary of these challenges. Make sure you do your due diligence on reputable companies. Do they have active reviews? If so, are those reviews paid for? Are they not paid for? Does it come from a recommendation? Because you want to be with a prop firm that is actively trying to get the most out of their traders from a perspective of helping them be better traders, therefore make more on their capital. They make more money, you make more money, not just charge you a challenge fee and then a retake fee and challenge fee and a retake fee. So yeah, I'd definitely err on the side of caution with
that. And that's what I've been saying since the beginning. Wolf in sheep's clothing, a lot of them. But without being too harsh on that as well, from a business standpoint, that is the lowest risk model. Of course, they're going to set it up that way. Two, trading is very difficult anyway. So there's a massive, a huge failure rate. Three, you're being incentivized the wrong way. So if think about this, if I'm starting a company and instead of the traditional real prop firm route where I'm actually incentivizing and supporting real traders to do the best with my hard-earned money, instead my marketing material is sexy and we're going to fund your account and you can go and trade under the sunset. You've already got that going against you. You've got that pressure to be a good trader going against you. So it's already flawed. The route that you're taking into becoming a trader is already harder than you not going through one of those prop firms. So you just need to be aware of that. As Josh just said there, from his experience, most of these prop firms make money, or the ones that he's worked with, make more money from the challenge entry fee than they do from the profits on the trading pot from the traders. No surprise there. So be aware of that. The next thing I want to talk about is VAT. So if they do start really cooking with gas and then they start making 80, 90,000 a year, now they're in the realms of having to register for VAT. How does that work?
Yeah, there's some complexity to this because you can also then start teaching other people how to do it, or selling a course, or maybe having people work underneath you in some capacity. So when you're getting into the realms of VAT registration, you need to really understand what income sources you've got, which are applicable to VAT and which aren't, which is, again, a conversation you really need to sit down and have with a tax advisor. This becomes even more important at this stage once you start getting into them realms. Because now you need to really balance, do you need to be VAT registered, do you not? Because some of this income's zero rated, it's not all standard rated.
Yeah.
So you need to understand the different income classifications, what is VATable, what's not, because now you need to start submitting a quarterly VAT return if VAT does apply.
Yeah.
And you have some income, so for example, the coaching and the mentoring or the courses, that is standard rated, whereas the prop firm income is usually zero rated.
Yeah.
So the classification is different.
Right.
Then you can have what's called partial exemption. So you're exempt on some of your income, but on your other income, if you've got other income sources, you're not exempt.
Could you give us an example of those?
Yeah, so let's say you are starting to document your journey on social media and show other people what you're doing and what you're making. Maybe you're shining a bit of a light on how you're doing it, getting people bought into that journey. And now you're potentially getting a group of 5 or 10 that you do some classes with and you help people through the process of learning to trade. That is essentially coaching or consulting. So same as an online fitness coach or someone else that's providing a consulting service. So at that point, that becomes standard rated income that would be subject to VAT. And quite quickly, we've seen this, you can have traders that make more money from that than their actual trading.
Yeah.
Some of them stop trading completely apart from for content purposes,
right,
to then actually do their coaching and consulting.
Yeah.
So understanding what is zero rated and what is standard rated. And just for the audience, zero rated means there's no VAT payable on that income. Standard rated means there's 20% payable.
Yeah.
There is an alternate scheme called the flat rate scheme, which again can be something that people look at. It's a different scheme of VAT that you can actually pay less VAT on certain elements of income, depending on how high your income levels are.
Right.
So again, that's something that I'd approach with an accountant.
So most of these firms that are offshore, they usually select countries where VAT isn't applicable. So when you're sending your invoice to the prop firm or they're paying you out, you don't have to pay
Correct.
VAT on that.
So that is the zero rated element.
That's the zero rated element. Yeah. Okay, cool. I want to just spend a bit of time smashing through some myths. So, demo account means no tax. That's if there's no real money, you're not paying tax on anything.
Correct.
Right. So if you're asking a question, because these are comments that we've got, like if you're trading demo account, do you pay tax? No, obviously there's no
income
tender.
for tax.
No, there's no, yeah, exactly. There's no income tax. You can't spend it. Prop firm, if the prop firm is offshore, then HMRC can't see it.
So we're not talking about the prop firm here. We're talking about the individual who is
Right.
trading with the prop firm. So your payout is coming into likely a UK bank account,
Yeah.
either personal account, sole trader account, or limited company account. So HMRC can see it.
Yeah, it's trading, so it's capital gains.
No.
No.
If you were buying with the intent to hold for a long period of time, then that is an investment and therefore subject to capital gains. But you're frequently trading, it would be worthwhile people to look at what's called the badges of trade. There's 9 different badges of trade.
Yep.
If you look at those and see which ones apply to you, you can very quickly determine whether it's deemed trading or not.
Yeah. Swing trading and day trading. So if you're holding trades, because I'll get people comment, if you're holding trades for like weeks, it's still not capital gains. It's still just a trade. So a capital gains is more to do with things that you're putting money into for a long period of time, like a property or a stock investment for years, or an index fund or something like that.
Crypto as well.
And crypto, yeah. If it's under £1,000, you don't have to declare anything. So there is a band in which you don't need to declare tax, right? So if you're brand new and you're not earning any money and you're thinking, geez, I can sit in my bedroom living at my mum's house and learn how to do this, and I could just pinch the entrance fee off of my parents and get involved with this. Well, the minimum tax bracket. Do you want to go through that?
So there is a stipulation with HMRC that if you do less than £1,000 in turnover, you don't have to submit a tax return.
Right.
So, for example, to go away from trading for a second, someone might sell something on Depop, might sell a couple of pieces of clothing. If you go over £1,000, it's deemed a business, you should be paying tax on it.
Right.
Whereas if it's under £1,000, it's minimal transactions, HMRC don't expect a tax return. You also have something called the trading allowance, which if you don't have viable expenses to offset, you can use the HMRC trading allowance, which is £1,000, to automatically deduct from your profits. So if you only had £300 worth of expenses, you default to the £1,000 trading allowance to have a larger chunk of expenses deducted off your profits.
And your personal income, 12,500.
12,500, yeah, 12,570.
Right.
That is the 0% tax range.
Yeah.
However, even if you did 2,000 and you had no tax to pay, you still need to submit a tax return.
Yes.
It's only if it's less than 1,000 that you don't need to submit a tax return.
Right.
And that is turnover, not profit.
Got you. Submitting a tax return and actually paying tax is 2 separate things, by the way. It's just a declaration of the activity of your ins and outs. Prop firms don't fall under financial regulation, so tax doesn't apply.
Again, a myth. Yeah. It doesn't matter whether they fall under financial regulation or not. And I think the lesson to take away here is don't worry about the prop firm. Worry about yourself. Are you receiving an income that in the eyes of HMRC is deemed taxable? If you are, don't worry about where the prop firm is based, how they're set up, what they're doing. Are you receiving an income? If you are, it's likely taxable.
So just to summarise, you are required to pay tax on income through prop firms. You might be able to deduct some of your expenses. And if that's break even, then great, you don't pay any tax and you're good to go. But then what's the point? You're not really making enough money to make it worth your while because trading's bloody hard. Second of all, when you do start making money, if you start making money for a prop firm, you now know exactly what minimum you can earn before you even worry about tax, and then up to 50,000, kind of some considerations there, and then over 50,000 to start looking at maybe a limited company setup, and then up to 9, when you go into the VAT threshold, you know what to do there. But ultimately, you've got to pay tax on prop firm income, no matter how set up you are. If you're a sole trader, limited company, a kid trading in their parents' basement, whatever it might be, they're looking at you, not the prop firm. They don't care about the prop firm. UK want whatever income's coming into the UK, they want a piece of it, basically. They want to take it off of you because you're earning it. So as the service provider, the tax, the government in the UK are going, where's our bit? And what you said about expenses, you have to be really clear about expenses, is because they're more tighter on that because they don't want to give it back. They don't want to give you it back, right? So they will. You have to have all this stuff in place. In terms of finding out more and working with you, Josh, and giving them some further guidance, because I think they will. Josh is really the right fit for this, and he's got a great team. He's got great experience, as you can tell from this video. He hasn't had a notebook in front of him. He hasn't had a iPad in front of him. He's all rolling off of the top of his head. He does this stuff day in, day out. Where can they find you? What's the best way to get in touch with you?
So I put a lot of content out myself on Instagram. I also do TikTok, Facebook, and YouTube. You type in joshthomas.accountant on Instagram. That'll bring up my page, and they can see some of the other videos that I do and the other topics that I talk on. I can also give you a link, which is an inquiry form direct into working with our team, should you want to put that in the video.
Amazing.
All right, so there you have it. Look, I've been saying this a long time about these firms because there's real prop firms and then there's the funding challenge prop firms, and you have to be very careful about what's going on in the back end away from tax. So just tax alone, yes, you have to pay tax. You're an employee or a contractor or whatever, you have to pay tax on any income. And if you've been taking payouts for a long time, you want to make sure that you get on top of that right now. But the biggest takeaway here, think about this. Let this sink in, because I get so many hate comments on these videos and I don't know why. I've got nothing to lose. I've got nothing to gain from throwing stones at these firms. I don't care, right? But what it tells me is when people get really agitated in the comments, it means that they're hurt. They can't bear to face the truth. Otherwise, they would just share their great experiences, and I haven't had anyone share a good experience yet. Now, here it is. The biggest glaring obvious thing that makes this a shambles is the fact that these firms are making in the region of 7 million a month, okay? And the majority, by a long shot, of their profit in their revenue comes from, not from traders making profit on their money, right? If they're a prop firm, that's their sole business, but they're not making money doing that. Most of their money comes from prop firm challenge entry fees and re-entry fees, okay? So that should tell you everything you need to know. Look, they're not a prop firm. A prop firm is where I have some money and I don't want to trade all my money, so I go and find the best traders to trade some of my money and I'll split profits with them. My only incentive is to find the best traders that I can and make sure I support them so that they can trade profitably. What I wouldn't do in that situation is pressure traders into making a certain return in a certain amount of time, or, charging them to pay, to come on board with me and all this kind of stuff. And even if I did do that, my goal would be to make money on my money. That's the whole reason I'm getting them on board. But if you're making most of your money from entry fees and not profits on the trading, it tells you, one, the traders aren't making any money anyway. Two, they're not worried if you make money on their trading profits because they're focused, all of their marketing budget, all of their sales, all of their website and sales material, marketing material on that challenge entry fee. That's what they're chasing. They don't care. They're not there to support you. So let me know in the comments if you've had a good experience with one. I'd love you to get in touch. I'm urging you. I'm really trying to get a good experience from someone, and I haven't found any, right? And I've been asking this question for years. So if that's you, get in touch with me. and we'll have a chat. If not, I hope you enjoyed the video. Make sure you pay your taxes. Make sure that you, go and watch the other tax video if you haven't already, and I'll see you in the next one.